All right, guys, good evening, good morning, wherever you are. Happy April 19th, Sunday. Got a lot to talk about here at Alpha Beta Reporter Weekly uh, uh, macro and swing meeting. Um, Futures opened an hour ago, gapped down on indices, on gold, and up on oil, which all stemming from the fact that this ceasefire may be breaking down and there may be more fear now in the markets, not to mention the overbought conditions that we talked about last week. And we'll tap into that in this meeting. But I want to get started. I know a lot of you guys know me. I want to make sure I introduce my peers. Ned is our macro thesis expert. He writes papers that hedge funds would pay a lot of money for in his thesis, and he's been spot on that. I got student beta. He's macro experts, options, and fintech. And crypto John, he's a research analyst like me. We were peers in CMT school together. Very good swing and day trader himself, and obviously by the name crypto expert. We don't pigeonhole him into that because he does a lot of stocks as well as options. Also, as we get into the meeting tonight, if you have questions over everything we anything we go over, you can throw it in the chat. When one expert's talking, another expert will monitor the chat and will make sure your question gets answered. And then as we throw the football around, will save time at the end to answer any questions you have in regards to investing, trading, anything we've talked about, so on and so forth at the end. So we usually start off kind of, real big picture. Uh, we'll start with you, Ned, before we head over to student beta. Anything change this week for you from stuff that you said last week? I know just before we started recording, you started to talk about some deals that Trump was making where we would own a lot more trade if you want to elaborate there.
Yeah, so he signed a defense pact with Morocco. And the reason I just bring this up is I think it's pretty relevant to what's going on right now. So it's Panama, Hormuz, Malacca, and Gibraltar. Those are the four things when you start looking at it. Hormuz is part of the plan. So we'll see what happens, but I don't think necessarily Hormuz is a story. I think the big story is actually Ukraine taking out Russian infrastructure, which more materially impacts um, like byproducts of oil, right? So gasoline, condensates, all that other stuff. I think the world is going to there's ways to get around Hormuz, but if and that's mostly because of Russia, and Russia's kind of filling some of the gap right now. If Ukraine continues to take that out, I think that now you have larger issues, but you also have something that's really interesting in that Ukraine also just had the first battle won in Ukraine where it was all robotics. They did everything from behind the scenes. So I think that these are some of the interesting things that are going to start flashing, and what you have to start looking at is, I believe, Qatar, um, and was it Golden Pass LNG? It's a project in Texas, the joint venture involving Qatar Energy and ExxonMobil. The first train's up, the second train's ready to go in July. So these are other things that I think are happening, outside that might be suppressing the price. And then you have Asia that's switching from oil conversion to energy to coal. So coal's starting to make a comeback, and those are just things that I would encourage everyone to start looking at. I know if you're day trading or anything, none of this stuff matters. Just read the charts and go. But you start looking at, again, infrastructure is going to be one of the most important things, probably in the next 3 to 5 years. Qatar's Bahrain, Qatar. Some of those guys are saying it's going to take like 10 years to repair some of these facilities. So I'm not sure if necessarily downstream oil producers, but it's like repair people who do the repairs on these. I'm starting to look as the next thesis.
Excellent. Well,
That's
I think you said something important there, Ned, outside of some of the stuff you're talking about is the fact if you're a day trader and you're in here trading and you're trying to make, you know, money day over day as a side hustle, you will become successful. And the idea behind Macro or swing trading is taking those profits and not risk them on the day trade and roll them into successful swing trades via instrument plays like options and otherwise, guys. So that's kind of the idea, is that you make your fast money intraday, you roll that up into short-term swings, then you roll that profit into longer-term swings, aristocrats, dividend payers, and that type of stuff. So that's whether you're prepared to do it now. This is the type of information that you need to learn so that you can build a portfolio, not just uh, try to make a side hustle, right? You want that side hustle to grow and pay you for a long time to come. If you have questions about that, guys, you can ask us in chat. And we'll come back to you, Ned.
Yeah.
Let me jump over to Pfeiffer. How are going into earnings, John? How are the banks? I didn't even look. How did banks do last week, and what do we have coming up this week, and then other macro data that you have?
Honestly, I wasn't paying a whole lot of attention last week. I was traveling for work.
Hmm.
I can get that information.
Yeah.
Not something on my radar today.
Okay. What do you uh, what do you think of those? Did you look at the NYMO and NAMO?
Oh
It's
yeah.
not. It's
Yep.
you want to go over any of that?
Yep. Let me share my screen.
Okay.
All right. So I'll start with economic calendar. It's kind of anemic this week. Uh, we've got PMI on Thursday, initial jobless claims. Not much here. Uh, but actually, I did want to take a look at the heat map from Friday. That's all rainbows and unicorns, man.
Yeah, absolutely. It's not
And
going to look like that tomorrow.
no, we talked about it at the end of the day. I'm like, this throwback's going to be epic.
Hmm.
Earnings this week. Finally, we're starting to heat up. We've got Tesla, Intel. Let's see. There was a few others. UnitedHealthcare. This is one of my plays from last week. We'll get to that chart in a few minutes. Um, Boeing is another big one. Blackstone. So, and American Express. We're starting to heat up here. uh,
Also Lockheed.
Lockheed. Yeah.
Hmm.
Yeah. It's yeah. Shit. Where is that? Tough to go through all these.
Lockheed's on Thursday before they open.
Oh, right there. Yep. The letters aren't very big. Yeah, so this is a big week, and we'll only continue to get the bigger names in the next week or two. A lot of the other FANG companies will report in the next 2 weeks. But what I really wanted to get at was this. Uh, yeah,
Yeah.
so if if you look at and it's not this is percentage scale here. I'm just looking at the actually, is that the NYSE above? No, it's not. I usually superimpose the NYSE up top. Um, I'll show the other chart that I have, which actually shows you the difference in the moves when the oscillator is overbought and oversold. It's in TradingView. Um, but yeah, we're at 80, which is very overbought, and the New York McClellan Oscillator is at 75. And we don't see these levels too often, right? I mean, the last time we saw this on NYSE was like last year in that May time frame. Probably was right around 65 in July. Um, and same thing, May of last year. This was after the April 2025 dip. And since then, things have been running. So yeah, we're definitely going to see a throwback. It's already starting, and it's kind of funny. We've gone from risk on to risk off to risk on, back to risk off, and Trump's kind of backing himself into a corner here. Uh, there's he's saying we're going to be meeting this week, and the Iranians are saying, yeah, nothing's been planned for us to meet. Um, you know, the Iranians fired at some tankers. The U.S. is boarding an Iranian tanker and seizing it. The Strait's open. No, it's not. It's yeah, it's pretty crazy. And if he keeps wavering back and forth without a deal here, he's going to look like a sissy here. And I don't think he wants that. So I think he's likely to do something stupid. So before we get to the charts, I posted this at the top of the chat today. It's a good read. NASDAQ up 60% since Liberation Day, 100% in 3 years. And basically, if you don't read Wolf Street, he's pretty good. He does this stuff for free. And his articles are actually pretty decent, in my opinion. But he's like, who needs crypto when you've got the stock market? So let me go over to my charts here. All right, I'll start with ES. I think John mentioned this last week. If you look at, except for Friday, the volume here was below average, right? And then we saw a massive rip up on Friday with the volume just barely above average. And this sort of movement without the volume to support it doesn't make any sense. So, just looking at that before everything fell apart, I kind of had the inclination that, I talked about this last week. I thought we would see the throwback sooner, but it's going to happen beginning of this week, and we're already starting to see it at the open with ES.
I think the thing that people need to understand, John, is when we could have a throwback on a negative catalyst here, but with the oscillators being that overbought, it usually makes for a more violent throwback,
Yes.
guys. So the rubber band is very stretched. So one negative catalyst is going to shoot it much further than what a negative catalyst would do.
Yep. And this is the State Street sector ETF chart that I use. So this basically tracks all the various sectors, and we see energy, XLE at the bottom. I expect that this will probably skyrocket to the top in the next day or two. So we're going to see some things flip. Tech and Bitcoin, leading the way here, and I would expect energy to move up, and tech and Bitcoin, well, at least tech to move down. So last week, I think I talked a little bit about UnitedHealthcare, and this is sort of the play. We wanted a break above was 313. We got that. We got some pretty nice candles, especially one on Friday. Earnings this week. I think it's Tuesday. Yeah, let me confirm that. Don't like to trade around earnings, but this is a longer term play for me. And I think you can take exit here. You could trail it, or you could this previous high, or if you really want to get greedy, up to this anchored VWAP, which is, which one is this from? I think it's the 23, or that's the COVID anchored VWAP. So that one's significant, that purple one. Right.
What's your entry level price there? What's your price zone to look in to buy?
So last week it was 313. It was a close above these previous candles, a breakout above the anchored VWAP and close. I'm in at a number of different levels, like in the 270s, a little bit above 300 and below 300 as well. The 285. But these were some critical levels here. You saw the anchored VWAPs from the recent high and this recent low pinching right here. Right? When you get that and you get a breakout, you can see there was a lot of activity kind of straddling these anchored VWAPs here. And then once it closed above it, it's off to the races. So, you might want to wait and see what earnings is going to do, but I'm confident with this play. Um, Last earnings, there was a small miss. Uh, on what is this? $113 billion. It missed by a 0.5%. This one's been beaten up pretty good. I know Ned had some concerns over it long term, or with the administration possibly in Congress turning over. But we got some good momentum on Friday, and I don't think this one's going to get beaten up nearly as bad as the tech stocks will. So another one that I'm holding long is Oxy. I was talking with John before the meeting started. This anchored VWAP here is at the recent high, and this anchored VWAP is from this recent low. You can see we wicked off of that and closed right at the anchored VWAP. Oxy was doing great when the fears of oil prices surging were a real thing. I think that's going to come back into play. Europe has about 6 weeks of jet fuel. Other countries are rationing gas. So, I think the winners will be the oil companies. And right here, I think I was talking to John. I think anything between 53 and 55 would be a decent entry. I'll have to. I drew this last week, and I hadn't updated it today. But that thesis still plays. I think we could run up, especially if we get a prolonged, dragging on of this war here. So that's one. Another that I was trading my flywheel around was Robinhood. And this one had a pretty epic run last week. We were in the middle of this gap fill. Unfortunately, I think this is stalled. So I sold some covered calls last week just in time to profit. And I think we'll see that throwback. We saw the rejection from this recent low anchored VWAP on Friday. Earnings are the 28th. Again, this is a play that I like long, and I did lose a lot. I bought it, I think a lot at 73, and I sold a covered call at 79. Pocketed a few $100, and then it ripped. You win some, you lose some, but I still profited off of that. Let's see what else we have here. No play here, but I think if somebody has the balls to short Amazon, that would be a good time. Look how quickly this thing ran. And this is all news of their new AI chips, which analysts are saying could be a real competition for NVIDIA. I'm not touching that this week, but after earnings, we'll see what happens, and I'll give an update. But earnings is, I believe, it's next week. Okay. Yeah, so I would expect this one to come back to reality, probably into this area of interest here in the 230 range. I think all the big tech stocks are going to take a beating this week. Microsoft's another one. If you look at the weekly candle on Microsoft, that's insane. I've still got my alerts on these anchored VWAPs, and I'm looking for the big discounts on Tesla, Microsoft, and a few others. So, I mean, people probably thought I was crazy last week when I was talking, Tesla potentially seeing the 150 range. If it doesn't happen, it doesn't happen. But they're expecting about a 7% move in Tesla this week. So I really don't have any long plays. I want to wait to see how this plays out other than Oxy. I think that's a good one, and I'll keep managing the UNH play. But I think tech is going to take a beating this week, especially if Tesla disappoints.
Okay.
Any questions?
See if anybody has any questions for it. I do want to go back to a question that Wayne had. Looks like it'd be best for, and actually, Wayne, you're in luck because Ned's a water expert. His questions are, and you already started answering it, Ned. But if you want to vocalize, what are your thoughts on investing in water since data centers consume large amounts of water? He's interested in ticker VRT. What do you got on that, Ned?
VRT is run. It's had a huge run to start the year. So usually with these infrastructure projects like Power, VRT, Vistra, some of these guys with the runs they've had, you start looking at the channels. I'd wait for the bottom of the channel to enter. They could go more, but like you've got to start factoring in like, okay, well, either backlogs got to go up, projects got to go quicker, they increase their prices, or they got to have more people, right? And so if you're not in it, it's one of those things like start following it on a throwback. If you really like the throwback, then we can start looking at it. But I think VRT was like 170. It's trading at 306 or something like that right now. So you start going through and I just be cautious. It's so hard to do some of those. And then like with water's not really like a growth industry yet. I've got a couple, like American Water is a good one, but those are like your steady compounders that you might get like 5 to 10% off of, every year. There's nothing wrong with that, but it's just something that I would just make sure that we're looking at, because there's other things like Train Technologies, Power, you've got Caterpillar, you've got Constellation Energy, you've got Linde, you've got Generac, GNRC, like that has battery backup to them that hasn't really run yet. VRT, what did they start the year? I'm just pulling it up right now. They're at 307. They're trading at 307 right now. So it's just one of those things where you're going into like a really solid place, but with everything that it's run, I mean, you could see a big pullback off of earnings, some bad news changes things. On these big runners, like I just took on Vertiv, I just took profit last week with where I was at on it, because I was in at like 170, 200. So that's basically like a 45% for me. But I'll look into it more to see if it still makes sense here. But I would wait until either an earnings report comes out, something like that, or I'd wait for a pullback on it for it to make more sense. I'm not really a big fan of investing in the water space right now, because I think that there's other plays, and I think a lot of the money in the water sector is private. In terms of growth, you could look at battery projects are a great one to be in, because there's some that have gotten hit pretty hard off of China news. So if you can find energy storage that is like, I'm looking at Enphase right now. Enphase is like a big one I'm looking at, because they've moved all their production. I mean, I think 80 to 90% of their production's now in the United States of America, where only 10% is from China, and that's a pretty beat up sector. Whereas like these electricity build outs, or it's still a solid thesis. I'm just cautious. I get really cautious on these when they've run as much as if that makes sense.
Sure.
Like, I get like if Vertiv was, if they're trading at like 150 to 200, I'd be like, yeah, like let's go. But with this run, this year since December, it was like 164. So it's like basically doubled since December. So that's what, 5 months, a double off of it. So I just be cautious of it. I'm looking at NRGV, I'm looking at Enphase, I'm looking at some of these ones that haven't really run yet to see if I can catch something off of that. Honeywell's another one that I'm looking at. Some of these guys, LECO. I'm I'm diving into that more. Also because like on these specialized projects, these electricians are, I mean, I don't know if anyone's tried to hire an electrician recently, but they charge a lot of money. And that's only up like 5 to 10%. So I'm just doing a lot of work on those right now. So I'll update you as I go, but those are my feedback on it.
All right. Yeah.
I
Thanks,
just
Ned. And
want
guys,
to,
go ahead, John.
I was just going to point out, I pulled up VRT while we were talking about it, just to look at the chart, and I have a note in here. We had originally talked about this chart in 2023, and I want to say it was Ned that brought it to our attention, and it was trading at about $40 at the time. We marked a buy zone for it at $36. So
Nice.
we've been following that one for quite a while.
Yeah.
Yeah. Well, and that's kind of like where I'm like, it's a money chart, but it's like right now you got a lot of stuff just kind of moving around.
Yeah,
and there's a lot of volatility. So it's like, if you're going long, let's have some patience on it and kind of see how some of this stuff plays out.
definitely agree.
Excellent. Yeah, and guys, if you're right now just figuring out day trading, that's fine. This is just all part of the greater education. The more immersion you have in the markets and greater market knowledge, the better trader you're going to be in general. So if you just sit there and take notes and just try to and listen, one of the ways that we all became experts here is not only through education but is immersion, and that's kind of what you're a part of. Piper, what else you got for us?
So this is the NAMO and NYMO chart with the Nasdaq superimposed on the left and the NYSE on the right. So if you kind of mouse over to some of these, significant lows, and you see the movement, and how these big spikes here, the oversold territory, like from this area here on the right, from the NYSE, um, you can actually correlate these big moves to larger moves up. And, you know, like this was close. This was like close to negative 50 on Friday the 13th of 26. You know, then from there we go, what is this? Let's call it 2200 up to 24.5, right? This is a good exercise to go through with you looking at the oscillators is really look at the levels on the underlying, and you can correlate it to the real dollar figures in each one of these indices. So,
Excellent. All right. You got anything else, Piper, before I introduce John?
nope.
All right, guys. Next guy you're going to hear from if you're a guest here on this is Crypto John. Like I said, he's one of my peers, has the same education level I have, and we like to make fun of him because we actually scored identically, damn near identically on all the CMT level tests. And then after we took the test, I asked him, I said, how many of those questions do you think came out of the book? And he's like, what book? So he passed those tests without a book. So he's probably smarter than me. I don't know, but he's about ready to
Probably.
drop. What's that?
Definitely.
Probably.
He's about ready to drop some knowledge on you guys. Anyway, go ahead there, John.
Yeah, so I wanted to touch on Bitcoin. Not going to go over it as much as I did last week. I think that I talked pretty exhaustively about my thoughts on it for now through the end of the year. But I wanted to just kind of touch on what the chart looks like now, where we're seeing some resistance and why, and what I would expect as what's going to happen this week. So more immediate. So you can see last week we had a little bit of a move up right into the anchored VWAP from the last significant low in this downtrend. When you guys are watching or looking at some of the charts that we post, you'll notice that on my charts, on John's charts, a lot of times we have all these funny looking blue lines, and I'll change the colors of some of them, right? Like this one is my all-time high anchored VWAP. I always make them green. The all-time low or the COVID low, I'll mark as red. And the rest of them are these thick blue lines, right? These are anchored VWAPs. Anchored VWAPs are a really common tool that we use, very powerful tool. If you look on Amazon for the Anchored VWAP book by Brian Shannon, it's the number one book that I recommend for anyone who's getting into trading. He does an excellent job of explaining why this is such a useful tool. And after we read the book, it very quickly became an important part of our trading strategies. So, as you look at these charts and you are getting, confused by the lines and how many different colors there are on these charts, just understand these are just markers of significant areas that we've identified as lows, highs, catalysts, events that have occurred in the past in these tickers. In this case, I'm looking at one from, a significant low that we made. And this is basically just telling us the average price that has been paid by market participants since that point. So it's a volume weighted average of the price that has been paid. It's a very useful indicator that gives us areas of interest for support or resistance, in this case, resistance. So this week, we ran right into that resistance and predictably fell off over the weekend after we hit it, closed below it. And now we're sitting right at this high that we had identified a couple of times over the past 2 years as being a significant area to watch. So What I expect is basically what I said last week. We're going to see a new low occur here. And as I was looking at the chart, I'm going to go to the cleaner chart here with fewer lines real quick. As I was looking at the chart earlier, I noticed too something that I didn't mention last week, which is just how visually similar these patterns are as we go from cycle to cycle. So we have our nice big first high, a decline, the next high, a decline, and then we have this basically bull trap formation that we're seeing now. So we have our nice big high, decline, all-time high, decline. This one did the same thing, right? And then we had a decline. So maybe we're in this phase, maybe we're in this phase, but the point is that we're seeing this very clear channel while we're still in this overall downtrend. The reason we call it a bull trap is because, yes, technically on the short term, as we look at this, we're making new highs and new lows, right? We zoom in and we're seeing higher highs and higher lows. But what betrays this is the fact that overall volume has declined as we move up in price. And we look at different exchanges. We look at, this is Coinbase now. We'll go back and we look at Binance here. We can go and look at Bitstamp. We can look at any of the exchanges, and you'll see the same pattern occurs where I've got price going this way. Meanwhile, volume is going this way. That's what tells me this is just a bull trap. So make no mistake, yes, moving from this low down here at 60,000 up to this high here at 78,000, there's alpha there, right? There's money to be made in that small channel, but the overall movement is still very definitively bearish. And so we're expecting a drop off, and I don't think that we're going to see a new high this week. I think it's much more likely that this rejection from the anchored VWAP sticks, and we're going to go back down to at least 70,000, maybe 69,000, test the local anchored VWAP, and then perhaps continue down from there, depending on what strength is left in the market at that point. So hopefully that made sense. I wanted to go from there into Coinbase and kind of tie into that and do something that I haven't done on stream for a little while and kind of chart out a little bit live so you guys kind of understand more of some of the tools that we use, some of the tools that I personally use, and how we make some of these plays happen, how we call some of these plays. So we're looking at Coinbase. Coinbase obviously super sympathetic to Bitcoin and crypto in general, right? That's what the company is based on, built on. And it has always traded very highly sympathetically to Bitcoin. So if I expect Bitcoin to drop, obviously I expect Coinbase to drop too. And that's true. When we look at the chart, I can see confirmation that that's what's going to happen, right? And so the first thing we look at is the candles. All right, so I see it up here. I have this nice top wick on the candle. Um, and there's different names for the different kinds of dojis. If you're getting started out, a doji is just a kind of a candle that has a closing price. It's very, very close to or exactly at the opening price, and it has a long wick on one side or another, sometimes on both. There's different names for different kinds. It's unimportant right now, but the point is, dojis can represent uncertainty in the market because the price closed at the same place it opened. There's not really a lot of pressure from either the bulls or the bears. But when we see one with this long top wick or a long bottom wick, what that tells me is that during this trading session, the bulls pushed the price all the way up to this level, and then the bears smacked it all the way back down before close. So this is actually a very bearish candle, and you'll see these commonly at the end of a move up. You see another one right here where we have this long top wick, and then the close price was exactly at the open price, right? Well, these typically precede a movement down. And so I've got a candle read that tells me, all right, this is going to move down. How far down? Well, we can look at a couple of things. We've got some anchored VWAPs in here already, right, from significant lows. And so I can already target this little area here between 182, 184. Let's add a layer of confirmation. So I go here, and I'm going to throw on a Fibonacci. Well, lo and behold, these levels are right in between our 618 and our zero point 0.5 fib. And so this area becomes more interesting to me. Let's look at our volume profiles. So the volume profile is telling me how much volume has been traded in the chart area that we're looking at. So if I zoom out, right, it's going to pull in more data and it's going to adjust these lines over on the right-hand side of the screen. There we go. And it's going to show me for this period of time, here's where volume has occurred, right? So this is giving me a visual indicator of price interest based on volume. And I can see that right at that level, I've got this nice little volume spike, right? So this stands out to me as an area of interest. One final thing I want to point out is momentum. So down here, we've got our stochastic. We use this as a momentum indicator, as something that kind of gives us a signal when we've reached overbought or oversold levels. You can use it for that, but you can also just use it for an indication of when the bears have overtaken the bulls. We haven't quite gotten to that point yet. You can see how we've got our red line here, still just below the green, and this is somewhat of a lagging indicator. So normally you're going to see the cross of the green back below the red a candle or two after you've actually made the high, right? That's what happened back here. The cross didn't actually occur for two more candles after the high was established. So probably about the same, but we've reached this overbought territory. And so we've kind of entered that area where we need to be sensitive to shifts in momentum. And so on open, you're going to see the next part of this getting printed, and you're going to see the red spiking upwards as the green kind of stays flat. So it's preceding that cross back down from our bullish indicator, where the bears are going to take control. So several layers of confirmation kind of tell me, number one, that this is our local high. Number two, we're probably going to decline to about this area. So initially, my gut says, all right, this is a decent area to accumulate coin, if this is something that we want to hold in the short to medium term. Now, if Bitcoin continues to decline as we expect it to, this isn't something that I would want to buy with the expectation I'm going to hold it through the end of the year. This would be more for a short-term swing. If I think that I'm going to get another leg up out of Bitcoin, when we look at its price at the end of the week and see what it has done, see what volume looks like, maybe I want to hold on to coin for a short swing. Great, that's fine. But if I'm entering it around these levels, I'd probably want to make sure that I have a pretty tight stop loss, maybe right around this candle where we had this gap open. And so somewhere below this 175, 174 level is where I'd want to set my initial stop loss. If we move down below the anchored VWAPs, if that support fails us, it's entirely likely that we see this reverse from this very short uptrend that we have gotten so far, and continue the move down. We don't want to get stuck on the wrong side of that trade. So I am interested in Coinbase here. Depending on what Bitcoin looks like as the week progresses, I may hold off on doing anything more with it until after earnings, because those are coming up beginning of May as well. Let's talk about Lockheed. We haven't looked at this one in a little while, and we're getting into a couple of interesting zones that I wanted to call out here. So we had a crazy parabolic run, great success on this one. We called this right after this gap down when we got below the COVID low anchored VWAP, and obviously had some great success on the run here. We took some profits all the way up, took profits here, and then I'm speaking personally here, took profits here, and then saw it make just one more new high after that. So we came pretty close to calling the top on it. The anchored VWAP's above us. We haven't really tested this one since this initial impulse move back up here, beginning of March. And this from the low that was established here, we've just been kind of hovering around. But what we are getting close to is our anchored VWAP from the last significant low, the beginning of December. And so this is coming pretty quickly as we see this decline kind of aggressively towards the end of last week, made a new low. We broke through the 618 fib level, and we're coming to a little tiny volume shelf here. You can see how there hasn't been a ton of volume traded in this move up just because it was so fast, right? We haven't seen a lot of up and down. It was more just, well, just straight up. But we are approaching this little tiny volume shelf, a fib level from the initial move. That's 1.618 fib extension. And we've got this anchored VWAP, which is really the biggest thing to me to look at. So we may see this offer some support, and that's why I've called this as buy zone one. Oftentimes when we're doing these trades, especially if it's something I'm going to hold longer term, I'm not going to buy everything in one go. I'm going to try to average my entries in if I can, on the hope that I'll get a lower price. And so this might be a smaller buy for me This will depend on your risk appetite, how you'd approach this, but this might be a smaller buy for me if we get down into this zone between 580 and 585. And then if we break below this anchored VWAP, because Lockheed is something that I still hold a large position in and I'm going to hold it for a very long time, I don't really mind if the price continues to decline a little bit from there. That just gives me an opportunity to average in at a lower price and maybe have a larger buy if we get to this zero point 0.5 fib level. If you stick around long enough, you'll hear Sean talk about something that's called half the move, this concept that when we have a significant parabolic movement, price tends to return to the 50% level, to the zero point 0.5 fib, or half the move. It gives back half the move on our throwback. So if we expect that to happen here, that puts us at 564. And at that level, we've also got this anchored VWAP from the initial move's high. And coming up just below it, our 200 period moving average, which historically speaking has been a significant area of support and resistance. And so right around that area, by the time the price gets here, we're going to see the consolidation of these three things. So between 560 and 565, we have another buy zone. So Lockheed, long term, super interested in this. I'm not really going to care too much about the daily price fluctuations in this because this is something I expect to hold on to for years. But these look like a couple of promising areas to maybe get some discounts as we continue to expect this to run. Now, as always, when you're trading defense stocks, there is the risk that the world breaks out in world peace. I do not personally anticipate that that's going to happen anytime soon. So I think the outlook for Lockheed is pretty great. Ned, you were going to say something?
So yeah, just with everything's changing on the battlefield.
Mhm.
So just like I said, remember I brought that up, was it 6 weeks ago with drones?
Mhm.
And look at what the drones sector's done.
Mhm.
Just be careful with that because Ukraine's interceptors, they have like a 60% hit rate, but they only cost like $2,000 to build.
And they're getting better. I mean,
Yes.
60% now, but they're getting better.
So production's ramping up with these guys.
Mhm.
But again, you have to have the facilities. So, I don't think they have the facilities to do it because they just talked with GM and Ford last week about increasing and scaling their industrial might.
Mhm.
Um, so that's just the only feedback because it's changing so rapidly.
Oh yeah.
Start looking for those low cost, like anyone who can produce low cost drones, especially in like actual defense, like intercepting offensive drones.
Mhm.
Those are going to make. Just be careful with it because if those come in, you could see orders go down for like the Tomahawk. All these big expensive radar. Some of the interceptors from the United States are like $3 to $5 million. And I mean, think about how many like $5,000 drones from Ukraine that you can get for that. You
Mhm.
just throw them all up in the sky,
Well, I mean, even the what is it, the Shaheed drones? I mean,
Yeah.
they're pennies compared to what we're using to shoot them down, right? So,
Yes.
I'm not saying at all that this is a play that you should look at instead of drone plays. This is something that's more of a yes and play. For
Yes.
me, Lockheed has been a significant name in defense for, much longer than I've been alive, and they're going to continue to be. And personally, my thesis on them is built more around their advanced products and some of the things that
Yes.
they have talked about developing and doing in coming years that have very little to do with drone warfare. Um, I mean, you can mark my words if you want to. In a few years, when we finally announce and reveal that we have a nuclear power plant on the moon, Lockheed is the company that's going to have built it. And there's a lot of other significant projects that they've been involved in that we have minimal knowledge of, like actual factual knowledge of. But the things that they work on have changed the world for decades, and they'll continue to do so. So I think that Lockheed is just a solid company overall, and should be a long-term part of most portfolios.
Crypto John, person in the chat's asking if you would chart or look at BMNR, and it looks like a uh, crypto
Bitcoin.
ticker.
Yeah.
Hey,
A bit mine.
hey, can I just throw in BMNR? Be careful with this one because they're raising a shit ton of equity. And they
Burning
have
cash.
they have like a revolt. I forget. Um, Tom Lee, this is Tom Lee's company. Um, I,
Ah,
I, in what he's doing is he's following the MicroStrategy model, but the problem is he's using equity to raise cash.
yeah.
So you're going to get diluted out of that one. There's also
Mm.
UPEXI, UPXI, and there is man, I was just looking at this guy where they're doing less dilution. I mean, you're going to get it, but you're going to get less dilution out of it, and you're also getting Solana. Give me 1 second. I'll pull this guy up. Um, SBET, SBET, because just with your share count, SBET, um, that's that's Ethereum as well.
Yeah.
But they have a lower share count, so like on big moves in price, you're probably SBET's going to run more than BMNR, but BMNR is probably more well known.
Yeah, I remember reading about both of these, and I kind of rejected this one for that very reason, just because they
Splits,
did a
yeah,
they did a 1 to 200 split in
terrible.
2021. They did a 1 to 20 in 25. So they're clearly diluting, and the chart kind of indicates that. I mean, there's a bunch of other splits that they did back here, so yeah. But anyways, uh, if they're attempting to mimic MicroStrategy, I'm not really sure that anyone does the MicroStrategy strategy better than MicroStrategy. Say what you will about the company, but the strategy that they're using does work for them. And now they're doing some other things with it that are kind of interesting. There's an argument to be made that it's a Ponzi scheme. The STRC, STRF, and there's a few other tickers related to these. They've got different things going on with. Um, they're interesting. I'd be much more inclined to look at utilizing some of those products over something like BMNR. Um, if that's really the part or the segment of crypto that you're interested in. Um, I I hesitate to say that based on your other comments in here, I'm not trying to call you out or anything, but I hesitate to say that anything related to crypto is what you should be focusing on. If you haven't found a trading system that works yet, crypto is a punishing segment of the market. It is highly volatile. It is something that can cause you to lose your ass so fast. And that goes for crypto, trading crypto directly, but especially crypto derivative products or a lot of these companies that are related to crypto. MicroStrategy has had its own share of volatility, right? Coinbase has had its own share of crazy volatility. So if you're just getting started, if you haven't found a system that works consistently for you yet, I wouldn't start with crypto. I would start with other market segments well before that. If there's a segment that you have personal experience with, like if you work in healthcare, that's the segment that I would want you to start with. If you work in some kind of logistics, if you work in defense, if you work in tech, like that's the segment that you want to start with because you have some intuition that can help to guide you there as well as you're learning the math behind some of the trading systems. So that'd be my encouragement for you. But as Sean said too, hop in the war room because that's kind of where iron sharpens iron on a daily basis, you know.
You have any other tickers, John?
No, I didn't. That was it
All
for
right.
me.
I wanted to share a ticker. I have one ticker for everybody tonight, and then we'll see if there's any other questions as we try to keep our meeting abrupt to an hour or as close to as we can to respect everybody's time, whether you're watching us live or watching the recording. I want to share. So, for those that don't know, the SEC eliminated the PDT rule this past week or a week ago. What that means, that's the pattern day trader rule. What that means is you had to have a minimum of $25,000 capital in your trading account. Otherwise, you were limited to uh, three day trades, so open and close of a trade in a 5 day rolling period, which really they did as a protection mechanism, but really eliminated a lot of retailers. And having gotten rid of that rule, and I don't know, it's very, very small now. But we're going to see an influx of more day traders and retail money coming into the market, basically like we did after COVID. There were more day traders made after COVID or during COVID than any other time in history because people were at home. They had some money from the government. They had time on their hands. And we're going to see that again. So, one of my tickers that I'm interested in is one that is just all beat up, but will benefit from this, is Webull. So if you look at Webull, it spiked up huge off of IPO and then fell off, and we've recently hit, not recently as in the beginning of April, hit its all-time low at $4.40 some cents. And then my lines here that look pink, that's actually two lines. That is the IPO that I use as a white. You know, John talked about how he likes to color his anchored VWAP so that he knows what they are. I do the same thing. White is IPO for me, red is my all-time high, and those are running together. Now, if the thesis is correct, and we're going to see more retailers come in here, brokerages like Robinhood and Webull will benefit from this by having more people opening accounts with them. So, and you can see there's two small gaps right here. There's a gap here. This is the larger gap, and there's a smaller gap here. I'm going to note that after this turn. The trade plan would be to buy anywhere in the threshold of this pricing, so in the $6 range, right? Then you could have a stop loss as low as this swing low, right? Or you can use that gap, right, as your defense or your stop loss, or this gap. Because remember, gaps create support and resistance as well. But what I have in there, and it's hard to see, that would be really good to use, there's a green line right there, and that is from its all-time low. So you can literally mitigate risk by being not only just behind this anchored VWAP, but also behind or below the gap. So now you have like a 65 cent stop loss. You could go as much as $1, but I'm just talking about a minimum needs to be 65 if you buy in around there. And where would you target? I think a successful target is that IPO anchored VWAP combined with the all-time high anchored VWAP. Then, of course, as it goes on your side, we will trail it. So this is the ticker that I like moving forward. I do expect market conditions to pull back. So this is not a buy for me Monday. This is a buy for me when I feel like the retracement in the markets has stabilized, and I'm going to look into buying this knowing that retailers are going to get into the markets. So, let's see what other questions folks have that we can get to you first. That's the ticker is Bull, Bull. Were you aware of that, Crypto John? Did you read that they got rid of the pattern day trader rule?
I posted that in the
Okay.
Discord. Yeah.
And guys, understand that for most people of us that trade futures, futures is not an instrument that is affected by the pattern day trader rule. It's affected when you're trading stocks. All right. So it's one of the benefits of trading futures is the tax benefits of the 60-40 split, whether it be capital gains or tax bracket, and the fact that you don't have the pattern day trader rule, and you didn't have the T+3, which is now T+1 rule. So there are a lot of benefits to trading futures.
So
Does
I'm
anybody?
curious,
Yes.
since it doesn't look like there's any other questions in the chat yet, and if there are any last minute questions, guys, throw them in there. But what makes you prefer bull over hood, since the charts basically look the same and the thesis is basically the same as well?
Well, I honestly I like them both. I just you had talked about was it you that talked about Hood, or did was it
Not recently.
Or Piper?
Yeah.
Uh, anyway, that so I just picked Bull to give another tick, but I think they're both
Yeah.
playable. Any retailer platform, Robinhood or Webull, I think is absolutely playable there.
Cool.
Piper, you got anything in closing?
No, get your popcorn. It should be an interesting week.
Yeah, for sure. For sure. Well, I mean, the tweets are always interesting, right?
Well, he's coming up on day 60, which I think is going to create some new problems for
Yeah.
him. I mean, then you've got to get a declaration of war from Congress. I'm not sure how you get around that.
Yeah, Evie, if I didn't hear that, but if Robinhood does do accounts for kids, again, more retailers onto their platform is good for the stock, right? So,
Yep.
Ned, do you have anything in closing?
It's going to be a fun week.
Yeah, for sure.
let's get going. I'll post some of the data in my channel shortly for that, so you guys can see it.
Okay. Well, guys, if you took time to sit with us this evening on the meeting, or if you've watched recording, hopefully you learned something and you can see what kind of the macro markets and swing trading looks like for you. And I'm glad to introduce you guys to my peers in Ned, Crypto John, and Student Beta John Pfeiffer, as they are savage traders and educators themselves. You guys all enjoy the rest of your night, and We'll see how we do this week, guys. Have a good one.
See ya.
See ya.